Hey out there, it's Dave Duford at Final Expense Agent Mentor, feagentmentor.com, where I help agents like you sell a lot of life insurance. At least that's the intention, and that is the topic of today's video. We're doing a deep dive, breaking down how you, yes, you, might be able to sell not just $10,000 in life insurance a week, 1 week, but every week of your career. The reason I'm putting this video together is because I've been doing some thinking about how to elevate the standards agents hold into themselves. I've been doing some coaching calls with agents all about raising your level of expectations. And what I found as a final expense agent, that each time I broke a specific production barrier, that production barrier became commonplace. It was easily attainable. I remember when selling $5,000 a week was a big deal. Now it should be average once you've hit it a couple of times. And the reason I'm doing this video is not just for those people who are trying to elevate their already good production to higher levels, but also to help you new agents who are getting into life insurance and really want to see a breakdown on a detailed level of what it really takes to sell a lot of life insurance. In this case, hitting a huge production number, of which $10,000 in production by any stretch of the imagination is a great weekly number to hit. So what we're going to do in this video is talk about several different aspects. First, we're going to talk about the concept of thinking big, expanding your thoughts, opening your mind to an idea that may at first seem unattainable, but actually when you look at the numbers that are going to follow, you're going to see how it can happen. And you're going to have a path, a blueprint to actually achieve that $10,000 production mark by the end of this. We're going to break down even further what kind of ratios you need to track in order to hit this number, because to an extent, you've got to know what to expect out of your business. We'll go into the specifics here momentarily, and I'm actually going to pull up a spreadsheet so you can see for yourself what numbers you should be tracking and how altering those numbers can help produce to that level that you need to. In this case, $10,000 as being the goal. Third, we're going to talk about examples in life insurance businesses where we can apply these principles, because this, again, is a blueprint for any life insurance agent. Specifically, we'll talk about final expense agents, mortgage protection agents, maybe agents that sell term life insurance to business owners, and then also annuity agents. Then we're going to go into strategies to optimizing the outcomes and of this particular type of approach to consistently sell $10,000 in production a week, because that is really the purpose of this video. As much as you may or may not agree with me, I've actually had some flack from subscribers and commenters about how I reference El Jefe, President Donald Trump. I do so in a non-political way, because if you take aside the politics, which side of the aisle you stand, the truth is the man is pretty damn successful and has been consistently through his career, through ups and downs. And I think the one thing that President Trump is correct in advising anybody is you have to think big. Look, $10,000 as it relates to selling life insurance is a big number to hit. You may be happy just selling a policy inside of a week, and that's totally fine. But the sooner you elevate your expectations and standards, the higher level you're going to realize that a big number like $10,000 in production a week is not out of your reach. In fact, I used to remember thinking, how could I even sell $2,000 or $3,000 a week? Now, if I put my mind to it and follow the same blueprint I'm going to give you, I can structure a plan, selling in my case final expense insurance, where I can hit $10,000 on a consistent basis. Is it an easy plan to put in place? No. Are you going to have to work really hard to do it? Yeah. But it's a plan nonetheless to show you how to actually achieve and have these goals from the outset. So let's go ahead and jump in, because the key thing that you have to remember here is to think big, is not to get discouraged or create objections to this concept. You need to be open-minded throughout this entire thing, because this explanation, this blueprint, will show you how it can be done. And while it may be difficult, if you take a step of faith and try to put this kind of plan into place, you'll find that, in fact, it can be done. So let's get started. All right. So the most important thing from the outside is thinking, okay, Dave, you're suggesting that I can sell $10,000 in production a week. That is a lot of production. And if you sell final expense, it could be, 15, 20 policies, maybe less for different policies, for different types of policies, but either different types of insurance. But either way, it's a lot, and it's out of the norm for sure. We're talking top 1% material. So how can you actually take 10,000 and break it down to where it can become achievable? Well, that's what we're going to spend time doing in this section. I call this the Know Your Numbers section because in order to take a big goal like $10,000, you have to break it down in its incremental parts because the sum of the parts is greater than the whole. In this sense, when it comes to selling, you have to look at your not just weekly production, but your daily production. What you make per hour, what you can expect to make per presentation. And what I'm going to do at this point is transition you over to my screen here as I go ahead and describe some of these numbers to you so you can get a better answer. So you're going to see an Excel spreadsheet that will be eventually filled out here in a minute. So there's a couple of things that we want to be concerned with when it comes to setting up yourself for success and understanding the numbers behind what it takes to hit $10,000 a week. So first thing you got to know is what your average case size is. So let me just go ahead and spell this out so you can see where I'm standing. So average case size, in case you're wondering, is the definition of if you take all your cases and divide it by your total premium and divide it by the number of cases, it gives you average case size. Our first example here, we're going to use final expense. Let's say your average case size is $600 in annualized premium. So again, this will depend upon what ultimately kind of product you sell. It may be higher, it may be lower, but this is just for the sake of example where we're going to start. We also want to know what your average lapse rate is. So let's say our lapse rate in final expense is 15%. Okay? So that means out of every, let's do the math, 100 cases, I lose 15 of them at one point. So we take that off the top as a way to project income, as you'll find in a minute. Next, we're going to look at your presentation close rate. So let's say I go ahead and do, after every presentation I do, I close half of them, all right? So that means if I do 10 presentations in a week, I sell 5 deals. Hopefully that makes sense. All right, next on the list here is your presentation to leads ratio, okay? So that means, let's say, out of what percentage ratio do I get from my leads do I get a presentation? So in this case, it's going to be half the time. Again, this may change and vary. You know, you may cold call to some extent and be in a position to where you don't buy leads. But let's just, for the sake of argument here, understand, you know, whatever it takes in this case for a lead-driven business. This is what we're looking at on a conversion basis. So to summarize here, before we start breaking down the numbers, and showing you how this works, our average case size is $600 in annualized premium. The lapse rate in which we experience is 15%. The presentation close ratio, meaning the amount of presentations I get, if I get 10 in a week, I'll close half of them. And then if out of all the leads that I purchase, I'll actually get appointments with half of them. Does that make sense? So if I have 20 leads a week, then I end up getting half in presentations. So this is our magic numbers, and this is really the main thing in which what we need to know. Our goal at this point is to take our numbers, and you can base this numbers maybe on, say, a couple of weeks worth of activity. The longer term period of time, the better. Again, you have the law of large numbers in your favor with more at-bats, more presentations, more events to help you kind of understand what's possible here. But now that we have this number, let's go ahead and take this a step further, because what we're ultimately trying to do is figure out what it would take to hit that $10,000 a week production number. So I'm going to take you back to my Excel screen, and we're going to expand on this a little bit further. So right now we're looking at these numbers here. And let's say at the present time, you are currently purchasing 20 leads a week. All right? So let's say leads. It's 20 a week. And let's say out of 20 leads, we know that you're going to get 10 appointments, and then you're going to close half of those, which give you an amount of $600 in premium. So $600 in premium, again, this is all advanced Excel here, $600 in premium times 500, that gives you $3,000 in production. Now, if you multiply that, $3,000, by a lapse rate of 0.15, that gives us $450, which will ultimately give us, let's see the math, $2,550 in premium that we can expect out of submitting $3,000 in production and getting an issue too. So what this is telling us is that right now, if we hold these metrics the same, we're looking at approximately $2,500 in premium in order to ascertain this production goal we have of working 20 leads a week, making $2,500 in premium that will stay on the books. So what can we take from these numbers here? So the solution here is that this is a ratio. Now, there's other numbers that will be a part of this that are important, of course. We have to make sure that we're able to sustain this kind of production and cover our costs, right? So, if you're buying 20 leads a week, you're probably looking at a $600, $700, maybe a little less if you're doing Facebook leads, but say $600 average cost of doing business, not taking into effect any appointment setting or any kind of cost of traveling and drive time and mileage, that kind of thing. So in this example, we're looking at $2,500 in production off of $2,000 in premium. You may not be impressed with that. Dave, we were supposed to get $10,000 in production. But here's the rub. One thing I've learned in this business of selling insurance is that once you have favorable metrics established, the best next step is just to simply scale the process so that you can realize more of what's possible from your life insurance lead generation and sales program. So what I do now at this point, if I have an agent who is saying, Dave, tell me how to write $5,000, $7,000, $10,000 a week in production, how can I do it? Here's the solution. You simply just do more of what you're already doing. In many cases, no matter if you're selling mortgage protection, final expense, annuities, term insurance, your numbers ultimately that you realize to an extent depend upon your presentation skills, certainly. But once you've established some numbers, it's just a numbers game. It's a matter of scaling. It's a matter of multiplying your effort in the form of doing more presentations. Now, you could level up to a higher clientele and start selling larger policies. But what we're assuming in this venture here is that you'll continue to sell what you're doing. You're just looking to leverage what you have to do in order to make it happen. So again, let's take a look at here to identify what you actually have to do in order to hit the $10,000 a week mark. So if we look at this number here, all you have to do is just multiply it by 4, right? So if we're doing 4 times the work here, this should give us $10,200 in premium, correct? Now think about it. If you've sold annuities, or if you've sold term insurance, or mortgage protection, or final expense, it doesn't matter what kind of life insurance product, you probably have a presentation. You've been doing this for a while. You probably have a good presentation. You can do what you need to in about an hour, figure out if you're qualified or not. So you get better as you go along, and you can become more succinct in your presentation skill. So what happens is that all of this comes down to is a matter of leveraging this up. So what you'll find is even if you do, believe it or not, 4 times the work, as long as you can keep these ratios similar or close to the same, you can hit this number on a regular basis and not literally change a thing from your presentation style, your lead generation approach, or anything like that. So now let's talk about some consequences of this particular approach, because what I'm suggesting here is that all you need to do in order to make this work is to do 4 times the activity. So what are the consequences of this? So first of all, you'll probably find that you'll have to buy more leads. The suggestion here of 20 leads gives you 2,500 in production. You're going to have to buy 80 leads to write 10,000 in production. And that cost is probably going to be about $2,000 to $2,500 given how much leads that you end up purchasing. It's also likely that if you're doing 10 presentations to write 2,500 in business, you'll need to quadruple your presentations and do 40 a week. As you can see, it starts to seem a little bit overwhelming. You've got to have the lead budget in order to afford the leads to the level that's necessary. And you got to be willing to put in the time and effort to run 40 appointments a week to make this happen. But the outcome of this is no different than a 10 appointment or 15 appointment agent. It's just the bigger numbers we're working with. That's all we're doing. And like sometimes people say, we just add a 0 to the end of $1 million to get 10 million. And we're just working with the same type of metrics. So it's a bit scary, but it's something that is absolutely attainable given within the restrictions of how your business model operates, which we'll talk about here in a minute, depending upon what kind of product you sell. So you can see how this would work. And again, we'll kind of discuss some of this stuff as far as smoothing out maybe some of the objections you're experiencing right now in mind, thinking, geez, how can I do 40 appointments a week? We'll talk about that momentarily, so just hang tight, because I want to show you how this would work for other types of business models on top of what it is right now. I'm talking about final expense. So let's kind of look at some other options here as it relates to different types of products. So take you back over to the Excel screen here. So let's say you're selling mortgage protection. Your average case size is $800 in premium. All right, mortgage protection generally sells more premium per case average than final expense. Let's say your lapse ratio is 10%. Again, that business tends to be stickier. Your presentation close rate is going to be 67% or 2/3. I tend to think mortgage protection tends to close as a higher percentage, generally speaking, in presentation. And your overall set rate, let's just call it the same. You set half of your leads as appointments, and you're buying 20 leads a week. So let's work out the details on it. Let's say you buy 20 leads a week. You're going to set half of those as appointments. That leaves 10 appointments, right? And then you're going to sell 2/3 of that. So let's just round it up to 7. So what we have here is an average case size of 800 in production, right? And we're selling 7 average policies a week. That gives us $5,600 in premium. Now, most likely than not, well, that's a different discussion as far as what it costs to get those leads. But if we can do out of 20 leads, we can set 10 appointments following these metrics. This is what we're looking at. Now, if we take the 10% lapse out, you're looking at approximately, I'm just going to round down, we're going to look at $5,000 in production. So as you can see here, how do you scale this up? You double your leads, right? You go from 20 leads, if this is where you're at, to 40. Keep these numbers the same. Run 20 appointments a week, and now you're in the position to where you can write double this number and hit $10,000 in production a week. Let's look at term insurance. Let's say you sell term to business owners, and your average case size is $700. Your lapse ratio is the same. You're getting, let's say in this case, 15 appointments. If you'll ignore the percentage close ratio, we're just going to say you get 15 appointments a week, and then you close out of those 15 appointments. Let's say you do, I don't know, half of those, right? So in this case, ignore the leads here for the time being. 700 times 7 is 4,900. And then we just subtract that. That gives us 4,400. Whoops, I'm getting ahead of myself here. 700 times, let's see here, 7. 4,900. We'll call that 4,500 or 4,400 to round down. We need approximately, looks like 2.25 in a sense, more presentations that we're doing already. So this means we'd have to step our presentation volume up from 15 to approximately, call it 30 to 35. So again, what we're talking about here are potentially attainable metrics to make these type of approach happen. Again, numerically, this stuff, hopefully you can see how it makes sense. All you have to do is just do more work. You have to see more people, get in front of more people to leverage your already existing ratios in order to hit these large premium dollars. And again, what you'll find is that's what a lot of these people do that hit these numbers. They're not necessarily better agents closing an obscene amount of production versus what the average is. They're just doing a lot more work, which leads me to this last point because, again, I'm well aware what I'm doing here is all theoretical, right? I mean, I'm showing you a Excel spreadsheet. I'm showing you numbers. But if you listen to any of my stuff, you know that numbers are just numbers, right? Like the reality of this business is actually getting into it, staying consistent, dealing with the cost of doing business, managing that, managing your emotions, managing your stress. It's a lot more realistic stuff that you can't really see doing on a spreadsheet. It's easy to do math, right? So what I want to cover are maybe the most common objections I hear from agents that foresee what's possible if you do $10,000 to hit $10,000 a week on a consistent basis, and the kind of objections they experience, because they usually think of several different things that cause them to say, well, geez, I couldn't do that because of X, Y, Z, A, B, C. So let's hit on those and kind of think about this first. So maybe, first of all, you're thinking, how can I do 30 appointments plus a week, depending on what kind of business model I'm doing? I don't understand how it's humanly possible to work 30 appointments a week. So first of all, I'll say, look, it's hard work. Can you do this inside of 3 days? You might be able to in certain models, but it's likely you're going to have to work 5 days a week to do this. Again, I'm not promising some sort of easy streak here with this type of approach. So if we look at how to do more appointments, one strategy that you have to start thinking about is that you're not just an agent, you're also a business owner, all right? And business owners understand leveraging their time, putting themselves in a position where they're doing their most important work as their primary focus. I am of the persuasion, as important as it is to set your own appointments, when you're looking to scale up activity to this extent and you've got these kind of metrics, that it is a plausible opportunity, plausible concept to outsource your appointment setting to an appointment setter who will handle it for you. So imagine this, you don't have to appointment set anymore. So that means you now have several days free during the week and the weekend to work more leads, to be in front of prospects, to sell more people, to make and optimize your income. So the strategy here would be potentially to bring in an appointment setter, charge them a fee, or they charge you a fee, but in exchange, you wake up every morning knowing that you have your day booked as much as possible, humanly possible, with appointments booked. Some of the downsides to appointment setting is they're never going to be as good as you. They probably won't have as good appointment setting ratio, but you can make all of that up by upping your lead flow appropriately to make sure they account for their maybe lower appointment setting percentage. Now, that does cut into your net income. It does increase your expenses, but it comes with the added advantage. Now you get to leverage your time more in front of prospects to potentially sell more of your leads. So that's the first thing that I would look at. So if your concern is how do I book that many appointments beyond buying the leads, right? And how do you set that many? You outsource it. And it's I won't say it's easy to find somebody to call, but I work with appointment setters that I have agents work with that need to outsource their appointment setting. I teach agents how to find appointment setters. There's good talent out there if you give it enough time and you know where to look. And ultimately, yeah, this is something that's scalable that you can do. You just have to start looking to outsource different aspects of your business. The other aspect, then this is one that I didn't realize could be done until I started doing it, is you got to learn how to pre-qualify more effectively and to the point, and understand how to figure out if your prospect is a high odds opportunity or low odds opportunity within the first 10 minutes or less. So pre-qualification is an important aspect to seeing your clients on appointments. When you have literally 10 to 15 appointments in the day that you're booking inside of that day, you're going to have to get to the point rather quickly, while also walking the line and balancing out being appropriate and being cheerful, connecting with rapport, being friendly, and not being off-putting because you're so rushed. It's a challenge, but again, it's something eventually, if you're exposed to having that many appointments, you'll find a way to shorten your appointment time so that you get to the point rather quickly, get right down to business, and figure out if these prospects are actually qualified or not. I'll give you a perfect example. When I was selling final expense full-time, of course, I was like most new agents. I was selling appointments every 90 minutes, every 120 minutes, something like that. And I needed that time to understand the product and become comfortable with it. Over time, as I started to want to do more appointments in the day, because I realized that leverage and scalability is the way to write a lot of business in the life insurance business, I outsourced the appointment setting. I also started doing hour-long appointments, really started hour and 15, then worked hour-long. The last time I was running completely full-time in the business, face-to-face with final expense prospects, my appointments literally were every 45 minutes. I was booking appointments every 45 minutes. I'd literally have days where I would have 15 appointments in a day, and that might seem nuts. And you might start thinking, oh my God, you're going to be so behind. Well, here's the thing. I knew my numbers well enough that out of 15 appointments, 3 or 4 or 5, depending on the day and the area, would no-show me. And then I know out of those 10 that 3, 4 maybe are just easily disqualified within 10, 15 minutes. Boom, I move on to the next one. And then I know that those other 6 are highly likely to buy. So I know that my numbers are working in my favor, that I can close, and I'm just actively trying to fight through to see these people as quickly as possible. And then if you multiply that over 3 days, that's 40, 45 appointments. Again, sounds nuts, but it's attainable if you look at this the right way and see ways to make this work. So optimizing your appointment times, really believing and manifesting the pre-qualification approach I teach makes a big difference. The other strategy to do is to make sure when you set appointments to do the cable man approach. I'll be there at 8 o'clock in the morning, but get me up to 9 if I happen to get stuck in traffic or I'm talking to another client I'm meeting before you that ends up going a little too long mistakenly. So if you set appointments with a time window, it helps people stick around and gives you a lot of wiggle room to complete your day. And there have been days where I would work 15 appointments. More than half the time, I'd actually end the day early because that's how far ahead I got. Now, sometimes I might be an hour or two behind. Yeah, that happens. But that's what's necessary to have high levels of production. And I depend on the law of large numbers to work in my favor because I know out of 15 that it is very rare that I'm going to have all of them be there and all of them want to buy and all of them take an hour and a half each. So that's how you get to a high level of production with your appointments. And you have to figure out a sales presentation that shortens the fluff, gets to the point while allowing you to develop expertise, relations with your prospect, and effectively pre-qualify quickly. So there's a couple other things I want to mention here that I think that are very important. I haven't spent a lot of time talking about what would happen if you actually improve some of your other metrics, such as your presentation, your close ratios, your lapse ratio. You can actually have a significant effect by the concept of what I call marginal improvements. So let me show you what I mean. So I'm going to take you back to the screen here, and we're going to look at, and this is a lesser important aspect of this. Now, I'm just showing you this because I've talked a ton about numbers. I've talked a ton about the strategy behind this, but I do want to leave on a minor note that, yes, you can change aspects of your sales game to positively affect your capability to get to that $10,000 a week goal. But the thing is this is the least important. Once you've got your numbers, I believe good enough is good enough. There is a diminishing return on an obsession to go from a 22, 23, 25% closing ratio, which is great and good enough to scale to these levels, to trying to get up to a 30% level. Okay, the difference between a 25 or a 250 batter and a 300 batter is literally Hall of Fame status. Okay, like that is huge. Like a standard deviation over. It's very hard to get a consistent ratio above 25%. So I say this stuff because I used to obsess about these numbers and would get frustrated because they weren't good enough compared to some other agents. But what I didn't realize is that good enough is good enough. When you ultimately decide that you want to up your production, you don't have to do anything better than if you've got a good enough presentation, you got a good enough close ratio, and if all that stuff is in alignment, then the next step to success is scalability, figuring out how to do more of the same thing in less time. So, but let's look at some marginal ways you can improve, because if you do make some marginal improvements to your approach, your sales game, your techniques, it can approach and give you some level of success. So, and improve your net. So let's take a look at the screen. So let's go back to our final expense example and look at ways to improve the numbers. So let's see here, presentation per lead. So 50%. All right. So let's say you are doing back to our 20 leads week number. And what we're going to do here is alter some of these percentage points. Let's say we can raise our average case size just $50. All right. So let's go from 600 to 650. That's not even a 10% difference in what it is that you're going to be paying. So let's call that 650. All right. So I'm just going to put out the increases over here, 650. Let's keep our lapse rate the same. 15% is good. But let's actually say we can start closing. It's out of every 10 presentation of the 5, we say we do 6 applications. Okay, 60%. And then let's say our number of appointments we set, instead of 50%, let's say it's 55%. Okay, just a marginal difference. All right. So now let's go ahead and do the math again. We're first going to look at this column, which is our old metrics, and then we're going to look at our new metrics. Again, we're still working 20 leads a week. And we're going to compare the difference in income over this year's period of time to demonstrate the difference. So 600 times 15% means what we're going to end up doing, 600 times 0.15. We're going to keep $510 in premium. Our close ratio out of 10 appointments is 5 deals, right? So we're going to multiply this 510. Hold on. 510 times 5 deals gives us a 2550 ratio, okay? And I'm going to put it there just for the sake of demonstration. That's what we're making in production off of these numbers. Now, let's see what this looks like modified. So 650, again, an increase in 50, just $50. I mean, a couple of bucks a month in average premium size, times lapse rate of 15%, means, let's say it's $98. So we're going to do 68, or 650 minus 98. So our average case size is 552. This is up, I believe, from 510. Our lapse rate, we calculated that, didn't we? Yeah, I think we did. Yeah, we did. Okay. So 552 is the number. Our presentation close ratio is 60%, okay? So that means out of every 10 appointments, we're booking, it should be out of every 11 appointments, out of every 20 leads, we're booking 11 appointments and we're closing 60%. So let's take 11 appointments times 60%. Again, 11 represents that 55% number right here, all right? And then the 60% represents the numbers that you actually close inside of the presentation after it's booked. So you can see the math's already done. Now we've got a 6.6 average. So how does that come out to? 552 times 6.6. We need to put an equal sign, and that gives us $3,643. The difference between this number and this number is more than $1,000. In fact, it's almost $1,100 in production. So literally, just with marginal improvements to your game, a little bit higher premium, same lapse rate, didn't even improve that, closing a little bit better and setting a little bit better appointments, gave you $1,100 a week in production. That's $4,400 a year, and that's well over $50,000 in extra premium just by marginal improvements and their exponential benefit. So the point of me mentioning this is that, yes, it's important to have great technique. It's first thing that's important is that you're good enough, right? Second thing is learning how to scale what you're doing. Third thing to be concerned with when trying to get a $10,000 a week average in production for life insurance sales is to marginally find ways to improve your game. Not just on one big thing, like taking that close ratio from 25 to 35%, but maybe going up a few percentage points. Maybe figuring out how to go from every 10 appointments you see, closing half, to just adding one more policy on average. Okay? These are achievable types of goals, and yeah, they're a little challenging, but they're little things you can do that aren't over the top that may improve your ability to get a little bit more out of each, which has literally almost I didn't do the math, it looks like a 33% improvement in production. That's crazy, by marginal increases in techniques. So again, that is more along the lines of looking at your overall skills, seeing what you can do better to improve them, and get ultimately a better outcome from your techniques and skill sets, in addition to doing the numbers. And again, in this example, the production here is 3643. That would mean you'd only need 60 leads to do the job to get 10,000 in premium plus. So there, again, small improvements may improve the overall metrics in your favor to do less than you need leads. But the important point here to take away is that this is all contingent upon a numbers game first approach, understanding that you got to work your numbers, whatever they are, making sure that you're good enough. And most of you out there are good enough to hit good enough numbers to scale. And then once you know those numbers, derive mathematically what's expected, and then implement, take action. This really is the hardest part of this. I know a lot of you people are thinking, geez, 80 leads a week, it's a lot of money. That's $10,000 a month in leads. I don't know if this will work. And what this all really comes down to is chutzpah and faith, right? You got to have the balls, pull the trigger on something this big. And you got to have a lot of self-confidence, faith, and a little bit of a risk tolerance. But you got to have faith in yourself. And look, most people don't go from 2,000 to 10,000. You work up bit by bit, you hit certain areas like 5,000, 8,000, and 10,000. Then it becomes more attainable once you hit those kind of incremental goals in between. But the concept remains the same. You've got to take a chance on yourself. You got to have faith in yourself to step up if you really want an outcome in your business model like this to hit this kind of production numbers. I'm telling you, that's the biggest thing, is wrapping your mind around accepting everything on paper here. It all makes sense, I'm sure. But are you going to do it? Do you have the guts to do it? Because that's what it comes down to. I'm telling you, too, you could do it. If you really wanted to, if you really had faith in yourself and you really wanted to do this, I'm telling you, going from what you're doing today to 3 to 4 times the activity level, you're not going to notice a difference in your presentation. You're not going to notice a difference in the outcomes. You're just going to be running a lot more money to your leads, which is going to be scary at first. But once you just implement and execute the same way you do whenever you sell final expense, mortgage protection, annuities, whatever your life insurance product is, I promise you it's like the same thing, except now the return on your investment, what you make after you pay for your leads, is substantially higher. It's going to be a multiplier of what it is that you were getting. And in some ways, I think this business model is a lot more enjoyable. You wake up every morning, you've got a lot of appointments set. You just are like an assembly worker. You're on the line, man. You're just chopping them up. You're closing them here. You're closing them there. Closing the appointments if it's no good. Going to the next one. It's here and go. It's like you're a machine. And it really works. It just takes a lot of guts to do it. And the last thing I'll leave you with, of course, if you're wondering about the final expense business and you've never heard of it or you'd like more information on it, this is my book. It's called The Official Guide to Selling Final Expense Insurance. I wrote it, of course. It's bestseller in final expense category. It will train you and develop you on everything you need to know to sell final expense effectively. And everything I teach in this book is what I do personally. It's what I use to scale up my business to be able to hit these top-level production numbers. And it's something that you can do too. If you'd like to learn more about the book, you can go to my website. It's feagentmentor.com/ whatever, just go there and then click the book at the top, or the link says buy my book or something like that. You can get it in an ebook, you can get it in a hardback, whatever you want is fine. And if you're interested in selling final expense, you want to work with me, you can contact me at feagentmentor.com/contact. Send me a message. I'll send you some material to review. And also, just in case you didn't know, I have a membership program for training for, it's called the Final Expense Inner Circle. And I give you on a monthly membership basis, you get all sorts of information as it relates to sales training, prospecting, live training calls I do for my members. It's really good to do. You cancel anytime, month-to-month membership. Hope you enjoyed this video, and hopefully it helped you think a little bit bigger. All right, guys. Dave Duford logging out. Y'all take care. See ya.